Welcome to an all-important Indianomics discussion, a report by Quess Corp, the staffing company, on wage growth in the corporate sector in India, published in the Indian Express, has made policymakers sit up. The report says that average salaries in India over the past 5 years have risen by just between 1 and 5% per annum, which means, adjusted for inflation, people in the formal sector are earning less than they did 5 years ago, adjusted for inflation. Possibly in response to this report, the Chief Economic Advisor, Anantha Nageswaran, has been advising India Inc. that there will not be enough demand for the products made by their companies if they pay their employees too less. So, the question is the steep slowdown that we saw in the second quarter GDP and in the corporate earnings, EPS growth, in the second quarter because of low wage growth. And how does one resolve this? I have with me the author of the Quess Corp report, Lohit Bhatia, President Workforce at Quess Corp, and economist P. Balakrishnan, Professor at the Center of Development Studies, Thiruvananthapuram and Amit Basole, Professor of Economics, specializing in labor at Azim Premji University. Professors and Mr. Bhatia, thank you very much for your time. Lohit, since this is so much about your report, please tell us the top 3 or 4 takeaways from your study.
So thank you very much, Latha, and glad to be with you on this show today morning discussing this all-important topic. This report was conducted and a detailed research was done somewhere at the beginning of this calendar year, and it was finally published a few months before the budget. In this report, we came out with the large macroeconomic data when it comes to employment and the job creation. The second, what we spoke about is what is the total labor market and how does that get subdivided. And the key takeaways from this report is all of us know we're about 140 crore Indians. In the working age population that is 15 to 59, the labor force participation rate is now a little over 61%.
Yes.
That's about 55 crore people. We also said that, by the way, contrary to popular belief that enough formal work is not getting created in the last couple of years, just in the years between 2017 to 2023, as per the EPFO data, about 6.7 crore people came into the formal work and created what is called a UAN or a universal account number. However, when you sum total all of these categories, we still said that a little over 11 crore people have some shape and form of formal work in India, which means that out of the total labor force, which is at about 55 crore, formal work at 11 crore is just about 20 or 21%.
Okay.
And that's what a report was talking about. The key recommendations which went to the policymakers before the Union Budget 24 as well was that how can the government aid and abate, and grow this sector.
Okay.
And last, before I pause, one of the key recommendations that we were speaking about was incentivizing formal job creation, which in many ways we see as the ELI, which came out from the government.
Fair point. I mean, that's very thorough. But you know, what got published in the Indian Express and what led to the CEA's comment is the level of the salary. I mean, besides the fact that you're only giving us nominal, you're not adjusting it for inflation. And even then, the growth in the BFSI sector is just 2.8% for those 5 years, compounded annual. For engineering, it's terrible. You know, engineering, manufacturing, infrastructure, we would think is important. And, you would have engineers there. And that is just 0.8, less than 1% growth every year. Likewise, I can go on. That salary increase looks very small. Actual salaries is terrible. You're telling us it is 17,500 in BFSI and some 20,000 odd in other sectors. Only IT looks a little respectable at 40,000. I mean, these are average salaries. They are that low?
So let me clarify a few points here, Latha. First, this is from the period 2019 as a base to about 2023-24. This also had 2 years of COVID in between. This data is predominantly for the 600,000 workforce that work at Quess. Now, Quess, as you know, is the intermediary of getting people from the informal labor market to the formal labor market for the very first time. So, A, you're dealing with entry-level workers. B, you're dealing with workers who are typically on an outsourced role. C, you're dealing with people who are either freshers to 1 to 2 years of experience. And D, you're dealing with a base which was 2019, and then we had 2 years of COVID impact.
Got it.
Now, let me just add one quick dynamic before I pause here. India's minimum wage average still continues to be at about 13 to 15,000 rupee. Now, many states are below the 15,000 rupee mark. And had social security code or the labor code being implemented, which is already approved by parliament more than 2 years ago by all the states and ratified, we would have been in a situation where a national floor wage would have come out. So again, coming back to this point, I think you have to keep that in context.
No, I take your point that these are COVID years and these are entry-level workers. Those are two very important takeaways when we measure this. But I mean, it's still like, how does a person live in 17,500 rupees? It looks a little tough. And this is formal sector. What happens when people are not in the formal sector? Amit Basole, you're the master of that data. You tell us, if this formal sector data is so shocking, is it worse in the informal sector? Maids and gig workers, I think in Mumbai earn a little more.
Right. Thanks, Latha. So I think, if you look at the periodic labor force survey, which is the official employment survey of the government of India, comes out annually and gives us a picture of the entire workforce. There too, the story is similar in the sense that wage growth has been very tepid. In fact, I would say earnings growth in overall, because it measures self-employment earnings and regular wages and casual wages, gives us the trends for all of them. And since the survey started coming out in 17-18, the regular wage growth has been barely, let's say, 2% or 1% annual. Self-employment earnings have been doing even worse, and we can come to that later if you wish. So the story is corroborated on on the wide labor market. The one bright spot, so to speak, is casual wages, which actually have been growing quite strongly in PLFS. Not much has been talked about over there. So something to perhaps explore. But yeah, on regular salaried work and so on, the story checks out on the entire labor market as well, including informal.
And the actual salaries also will be, below 50. As Lohit pointed out, informal would be like 13,000 perhaps.
Yeah, the levels are also not that different. If I recall correctly, the average regular salaried worker in PLFS would be somewhere around 15,000 rupees per month.
Okay, so in the first level of formality, they are not earning much more. It's just that it is formal and they probably have ESIS and those benefits. Dr. Balakrishnan, now to come to you, sir. We all sat up in terms of the growth suddenly capitulating to 5.4% and that getting corroborated by corporate India. If you think GDP is not very clean data, corporate earnings growth is clean data. That earnings growth was like, less than 5%, low single digits in the second quarter. Is there a sudden development in terms of the labor market going astray?
I don't think this is so sudden, because if you look at two sources, one is the PLFS data and the other is the data for rural wages from the Labor Bureau. Over the past 5 years itself, real wages have declined in some areas, in some sectors, very drastically, by about 25% for the self-employed earnings, that is, over the past 5 years, except, interestingly enough, for casual workers, whether you look at the similar Labor Bureau data or the PLFS data, for casual workers, it's increased. So, but for all other sectors, it's decreased very substantially. I just want to say that, in my view, this is not a particularly a recent development. It's been happening for the past 5 years, and it's not surprising because the inflation rate has been very high for the past 5 years, right? The food inflation rate. Yeah, so it makes, and inflation, but especially food inflation.
Okay.
So it's not surprising. It's not all that recent. And while the data on the corporate sector is very, very clear, and we have to thank Quess for it, I just want to say the problem is probably wider than just the corporate sector in India.
Okay, no, Dr. Balakrishnan, let me rephrase the question that people have as investors or as observers of the economy. You know, one interpretation of the slowdown was that fiscal spending just collapsed in the first quarter and the second quarter of the current fiscal because of elections and because of perhaps extreme heat. We got all those reasons. And because the Reserve Bank's policy for other reasons tightened because of dollar buying and liquidity, dollar selling by the RBI and liquidity tightness, they went after unsecured loans. We thought that was the reason for the slowdown. But are you saying that those are temporary and this is the bigger reason, or is it the other way around?
I would say that. I mean, it seems to me that whatever has been budgeted, maybe capex in the past 6 months has slowed, I believe. But the RBI's role cannot be very great because the rate of interest, which is the key variable, has remained, nominal rate of interest has remained the same for the past 22 months or something. So I would say there's a deeper problem of declining real wages, and maybe the immediate problem could be that capex has not been maintained. Sorry, the central government's capital expenditure, not the private sector, has not been maintained at the same level as it was in 23-24. So that's my view.
That's in calendar 2024. Clearly, for 6 months, they did not spend as much as the budget estimates indicated. Where do we see things to be repaired as we expect that 7% growth? Since we have been having decent growth in the last 3 or 4 years, and we suddenly saw this drop, do we first fix the fiscal deficit and the RBI's tight liquidity policy? Will that keep us still at 7%, or is 7% difficult unless we graduate more people to at least the lower middle class?
Well, if the private investment rate does not really take off, clearly growth can be maintained only if public investment or public capex remains very high. The other is, I think the main thing to try and fix now is inflation. Without fixing inflation, you can't fix the slow growth of consumption, which lies behind the slow growth of manufacturing output in particular, and the economy more generally. So yes, capex will have to remain, though some of it is depressing in the destructive impact that some public investment is happening on natural capital, etc. But from a macroeconomic point of view, that would be necessary if private investment is not buoyant, and you must fix inflation. RBI's role, in my view, right now is not very great.
Yeah. No, I take your point entirely, sir. RBI can fix perhaps core inflation. They can't do much about food inflation. And maybe the missing chairs in this discussion would be perhaps people like Professor Ramesh Chand and Dr. Gulati, who would tell us why is food inflation for 18 months so stubbornly high? Either it is pulses, or it is potatoes, or it is other veggies. But that discussion for another day. For the moment, we have to take a break with the conclusion that it's a combination of causes, both fiscal spend being low and urban wages not taking off, urban jobs not taking off, and rural wages, of course, suffering as they always have. That's the cause of the slowdown in the economy. We will come back and look for solutions from our experts back in a minute. Welcome back to a very special Economics, where we have been looking at an interesting Quess Corp studies, which is showing that entry-level salaries have not been rising much, and the levels of salary also are between 17 and 20,000, indicating that there is a problem perhaps in the structure of the salary itself that is driving a slowdown in urban consumption. We have also been speaking with economists P. Balakrishnan and Amit Basole to check out whether urban consumption is the reason for low growth, or whether we have to fix other parts of the economy. Thank you very much, gentlemen, for waiting on. We are now looking for solutions, really. Amit, you have... okay, before I come to you, Amit, Lohit, you were telling us the recommendations that your Quess Corp study made. Can you tell us what were the key recommendations?
So the key recommendations in no particular order is the focus to incentivize MSMEs. MSMEs we know is the backbone of India, both from an employment creation point of view and an economics. And that has somewhat what already come out in front of us in the manner of ELI, employment linked incentive. The second we've spoken about is skill development with a focus towards entrepreneurship, particularly entrepreneurship and on-job training inside companies. Third, we've spoken about is a transition from agriculture and low or no paying jobs to manufacturing intensive jobs. And manufacturing intensive jobs, Latha, is very, very crucial. We've leapfrogged from 91 liberalization to now as a services economy, but we've kind of, remained very behind when it comes to the manufacturing and the core blue and gray collar workers. We've spoken about the focus on SEZs. We've spoken about the focus on female labor force participation.
Sure.
And these are some of the key topics that we've given. There are a total of 9 recommendations that we've.
And to be fair to the government, they have already incorporated the employment-linked incentive scheme, as well as they have tried to do the internship scheme so that some kind of skill development is also there. But these are age-old problems. And in spite of the last 2 terms of the NDA government speaking again and again about manufacturing and Make in India, actually, if you looked at manufacturing's contribution to GDP from 2013 to today, it has actually fallen. So, there are wider problems here. Dr. Balakrishnan, solutions.
Yeah, I would say there are 2 things that, as far as the immediate situation is concerned. One, I think there should be an effort to implement the minimum wage across the country. Here, the states have a major role, and unless the states take a very serious, proactive position on this, I'm not sure that would come about. Obviously, the level of wage must rise and must keep in line with inflation. The other thing is that you would have to tackle inflation, which the government has not made much of an effort, and it's now pretty clear, with 5 years of inflation being above the RBI's targeted 4%, that the RBI's ability to control inflation is limited. And clearly it is being driven by food prices, which would require, once again, the states taking a proactive role. But the central government, I would say, has actually not taken a very serious coordinating role as far as trying to keep food grain prices under control is concerned.
To be fair, sir, they are giving that 5 kilos of free grain so that at least abysmal poverty is.
You're absolutely right, but I'm talking about the control of prices.
I agree.
Prices in pulses and vegetables.
Absolutely.
The PDS is for cereals, and cereals are increasingly lower part of the overall.
No, I take your point. I'm not disputing. I'm only saying that that effort came from them, but clearly, food inflation is a supply side issue, and whatever it is, the technical mission on oil seeds and all that we have tried in the past needs to be dusted up and done again. Amit, you're a much more deeper student of informal sector problems. What do you see as solutions that are perhaps low-hanging fruits?
So, I want to go back to the point that Mr. Lohit Bhatia made earlier about trying to increase formal sector jobs and particularly focusing on small enterprises. I think all of us know that this is really where we need to be looking. And unfortunately, the reverse is happening in the sense that in the PLFs, you can see that the proportion of regular wage workers has actually fallen, in recent years, and self-employment has risen, which is not a good sign because, you can always argue that it's okay if wages are flat for a while as long as employment is increasing in that sector, because then the total volume of demand is increasing because people with higher wages are rising. So that share of regular salaried workers has to go up constantly. That has not happened in the last few years, and that's really worrying to me. Perhaps even more worrying than the wage, tepid wage increases.
Okay.
So it's very clear that a combination of wage support, like what Professor Balakrishnan was talking about, and active job creation policies are really both are equally needed at this point.
Okay.
It remains to be seen whether ELI is the type of approach, because we don't have enough evidence to tell if those kinds of wage subsidies actually work in creating employment, or that the usual story about better infrastructure and so forth, particularly at the local level. And I say this everywhere that I speak, that when we think of infra, we should not be thinking of highways and ports only or airports. We should be thinking about local roads.
No, you're
and
right. Because all the highways have now become prefabricated structures. So the old, say 2 decades ago, high construction meant more jobs. It's no longer true. Now it is not construction for the better part, at least infra is not labor intensive. A very
It is
quick
not the
point,
big one.
a very quick point from the economists. The CA exhorting corporates to pay more. That can only sensitize, right? That's not a solution. No corporate is going to pay for altruistic reasons, will they? First to you, Dr. Balakrishnan. Quick answers from you and Amit.
That's absolutely correct. But I just want to say, presumably they are paying the minimum wage, and I'm just answering that's the only thing that really the policy can insist on.
Yeah.
Whether they pay higher wages or not lies in political economy, the distribution of power between capital and labor. I'm not sure the central government can do very much about that at all, frankly.
Okay. So basically, they just have to have probably more investments in textiles, more investment in footwear, basically labor-intensive sectors. Amit, your sense, the CA exhorting, can that be of much use?
Well, of course, we all would agree that it's a bargaining power in the end that determines the distribution of value added into wages and profits. And the fact that profits have grown and wages haven't indicates higher bargaining power of capital. But there is a role for the government. Part of it is moral suasion. I don't think that it's wasted because we have to remember that there is a high road which is paying people better and getting them to stay longer, investing in them and increasing productivity that way. That we know that works. So paying people the bare minimum that the market supports is a decision that you make.
Okay.
And you can always make a decision to go differently.
Okay.
And you probably will reap the rewards for that. If other factors are okay. Now, I don't know if corporates are thinking that, I'm going to sit and wait for the demand cycle to pick up. And so on, that's of course a vicious
Fair point. Sensitizing, moral suasion, all those make sense, but that will take you only this far. Very quickly, Dr. Balakrishnan, as the trained macroeconomist here, what did we learn from Arthur Lewis? That initially the Lewis model was that underdeveloped economies, their whole strength is that they get the marginal labor at literally no cost. And after a point, when you have completely drained out your labor, then only labor costs start rising. That is supposed to be the fundamental advantage of low-developed countries. Where does that theory figure in the whole thing?
Yeah, I think one of the things that the Lewis model does not have a role for aggregate demand. If aggregate demand does not really grow fast enough, labor is not going to be drawn from rural areas or low marginal productivity areas into higher marginal productivity areas, which give them higher wages. So aggregate demand has generally remained a problem in India. And secondly, once again, it's the power of capital. Bargaining power of labor is very, very weak in India. But Latha, I just want to make a very quick point about the CA and the corporates. I think the corporates must be reminded that for the past 10 years, they have been the focus of attention of this government, the Narendra Modi government. And the tax rate has been lowered for them. There's been some effort to improve the speed of doing business. They are expected to raise the investment rate. They have not done so. So from that point of view, there is a case for the CA to talk to the corporates the way that he has spoken.
Okay, fair point. That rounds up the discussion very nicely. Lohit Bhatia, Dr. Balakrishnan and Amit, thank you very much indeed for giving us a 360-degree perspective. The government is perhaps working in the right direction, but needs to do more simply, concentrating on labor-intensive sectors, enforcing the Minimum Wage Act, at least at the state level, and of course, above all, controlling food inflation. That is a central government mandate. Wrap up on this edition of Indonomics. Thanks much for watching.